Malcolm Graham Wood, and welcome to my CEO interview on Core Finance. My guest today is Paul Griffiths, CEO of Predator Oil and Gas. Welcome back, Paul. Nice to see you again.
Good day, Malcolm. Good to see you again too.
Excellent, excellent. Well, I think we'll tuck straight in because, we've talked 2 or 3 times, and I don't think we need to do an overview because we'll cover the whole company in the questions that hopefully that I've got for you today. So why don't you tell us what the status is in Morocco with the MOU-1 well, given that I know you've been doing a lot of preparations while we've all been sort of tucked up.
Yeah, yesterday we had our survey team out in the field surveying in the well location and identifying the access route to the well pad build, basically. So that was all very positive, accessing sources of water supply. So we made quite a lot of progress in terms of, we said we prepared a site in April, and we're right on track to do that despite COVID-19 restrictions. It demonstrates what you can do actually in the field.
Yeah.
And also we've gone through the well inventory that SDX is making available to us, and we have about 85% of what we need. The remaining bits and pieces we can place orders for almost immediately and get them in country to fit our schedule, which is obviously starting to do. That's all going well. And just a reminder of the target. The target is same reservoirs in Morocco. So no new geology here, nothing spectacular. But the difference is that we're looking for material resources, and that's what this basin offers over Raab.
So tell me, when you've the process to you're going to be the time. I'm looking for a bit of a time scale here. When as a result of that, when do you think you'll be going in? We obviously know which zones you're planning to look at because it's the same reservoir as before. And then into a testing program after that. Would that be sort of roughly right?
The grand schedule at present is to spud the well before the end of Q2. Effectively to test what we have. We anticipate probably 2 to 3 reservoirs that will probably be the candidates for testing, and our logging program and our pressure data we collect will define the testing program in detail. We then mobilize the rig or demobilize the rig back to SDX. We can test the well without a rigless testing.
Yeah.
And then we're preparing another 6 potential locations on the ground for when the rig comes back to us later in the year. And that's to effectively appraise immediately the MOU-1 well, but also obviously look at 4 or 5 other prospects, all very similar with big material resources. So very good to have the reservoir the rig stacked in Morocco, because it gives us that optionality to move and drill quickly in the event of, which will be, of course, a success.
And so how long have SDX got it after they take it away? Have you got it signed up?
Basically, they have what's in the public domain is that they're going to drill some wells initially, and then the rig will move to us, and then the rig will go back to SDX for the remainder of their program, potentially in Q3 this year. And then the rig becomes available to come back to us. And obviously, we want to take that rig for extended period to drill Kasif.
Excellent. So on the basis of the success which you've just forecast, tell me what are the options for developing a gas find at Kasif?
The key to anything is you can't develop anything unless you find gas. So obviously we're very, very, very confident, as you might expect, given my experience in Morocco, of finding gas. We have a multiple flexibility in terms of how we can develop the gas. We can develop initially compressed natural gas to the industrial market. We can develop gas to the power market in Morocco longer term through the Maghreb pipeline. We can export to Europe through the Maghreb pipeline. We're only 2 or 3 kilometers away from the pipeline. And we can also look at our own power on site, generating power on site, and supplying it directly into the electricity grid, because there are high voltage lines across the block, or into the wind farm at Tazo, which is just to the west of us, which is becoming operational in 2022, and that's funded by the Japanese banks, and also Mitsui and EDF are building that. So it's backup power for the interruptible wind supply as well. So a lot of options, and none of them are dependent on particularly finding a certain volume of gas. We can scale up the gas resources to meet any of those development options, which is the exciting thing about the risk factor here.
Excellent. And so before we move on, you'll have a situation with regard to funding further wells, but you own most of this already with On Him. What's the sort of initial thoughts about how you're going to take that?
The key here is early monetization of gas. So the compressed natural gas option that we're looking at is very low capex, slightly higher operating costs, which of course the Moroccan industrial markets can support. But the bottom line is that's entirely fundable in a development project with those sort of gas prices. So we'd be looking for a partner to develop the asset in the event of, which you will be, of course, of a successful gas discovery. And that allows us to get early cash flow, but most importantly, it's a manageable amount of capital for an immediate return. And the idea, well, not the idea, the strategy is, Predator, we try to do things as fast, efficiently, as safely as possible. The plan is to have first gas Q2, Q3 next year to the industrial market. And that is achievable.
Good stuff. Well, I think, can we move on to Trinidad? Paul, if you've got anything else on Morocco, please say so.
I think we've covered Morocco.
Yeah.
Looking at my background.
So you've got, you've indicated that you think now that having done a lot of the hard work in Trinidad, that it's a good time to expand the activity there on the CO2 front. Why don't you talk us through your thoughts at the moment?
Well, I think it would be fair to say that Trinidad has been a longer haul than we anticipated back in April, May 2018. But the success of the Innis Trinity pilot project, which we've announced several times during the course of this year, and the progress that we made on that has actually de-risked the whole CO2 EOR concept and effectively at a stroke wiped away 25 years of suspicion and inactivity. And that's kind of opened the door for us in terms of being able to now negotiate and discuss with the ministry a CO2 EOR services license, specifically to provide CO2 services. And of course, that's based on the Predator model established over the last year and a half. It also means that the government has adopted CO2 sequestration and CO2 EOR as a key element of onshore energy policy going forward. And where that translates into benefit for us is that in future, all extensions of onshore incremental production services contracts will require a work program that includes secondary recovery. And those options are twofold: waterflood or CO2 EOR. Well, waterflood doesn't really work in Trinidad and hasn't been proved to be that successful, whereas CO2 EOR is, if you like, the new kid on the block. And of course, we control the ability to deliver CO2 EOR services. So it's taken a long time, longer than I would like. As you know me, I like to get things done, if not instantaneously, then certainly within the year. But it's proving to be very beneficial in terms of opening doors and creating the business and the opportunities and the partnerships that will now flow from that, starting almost immediately. So I see that. Always said we were building a business in CO2 EOR business in Trinidad. We've done that. And now the time is to expand that business. Oil price has risen to, today West Texas, $65 a barrel. We wiped away or increased the threshold, if you like, on the supplementary petroleum profit tax and the application of that. We're now in discussion with the ministry on VAT credits and benefits for CO2 EOR operations. So we've transformed the economics of CO2 EOR from 2.5 years ago to where we stand today going forward. So I kind of would ask someone, well, why wouldn't we invest in expansion? We've done the work, we've done the hard work. now we're looking for to reap the benefits.
And partners-wise, have you been in discussions already with regard to that?
We are, have been, and continue to be, and in the process of signing NDAs. We've already signed two NDAs with operations in Trinidad. A third NDA hopefully will be signed within the next couple of weeks, and they're all on the basis of collaborating on CO2 EOR operations. We providing the services, if you like, for some of their major onshore oil fields. So we're not going to be in a position to do everything, simply because the CO2 supply and our resources in terms of personnel. But certainly we'll cherry pick the one or two prime parties that the market will instantly recognize when we're in a position to announce that.
It sounds like it's stepping on a sort of a fair pace on that front as well. I mean, as you said, it's taken a little bit longer, but now you're here. You're and presumably you're going to get it sorted in Trinidad, because before you've had thoughts about moving to other parts of the Caribbean or even further with this concept.
Well, we have looked at. We were invited to tender in Barbados. We were asked to participate by a party. We were asked to by an unnamed government to participate. You can guess that's quite close to the United States. You can guess who they might be, but we declined that offer for compliance reasons. And it's nice to have those invites, but the reality is there's plenty for us to focus on in Trinidad. We're about revenue generation and building our business, and we're not yet ready to take a leap of faith to go outside of Trinidad, having evaluated those projects. We think our shareholders would want management to focus on the rewards in Trinidad first before we start to look further afield.
But it rubber stamps you as a green, low carbon play. I think that's.
Well, it rubber stamps us as a green, low carbon play with CO2 sequestration credentials. And it always amuses me when I read about all the efforts about CO2 sequestration in Ireland, for example, that we're talking about for several years. Go out to a tender process, then review the tender, and then go out to another tender process. And it's years down the road. We're already doing it, albeit of a much smaller scale, but it shows what can be done with a bit of application and a bit of buy-in by the regulatory authorities.
Yeah. I mean, I'd like to take a few minutes to talk about Ireland, because ironically, a year or two ago when we were talking about things, it was very much the sort of third leg, and we weren't talking about it very much because the Irish were confirmed that they knew that they could run the whole economy on the back of a few rubber bands and no fossil fuels. Yet
I would never say anything like that.
No, my words, not yours, Will.
You can, but
no. I mean, what I'm saying is that from being on the back burner, perhaps, to now being, all of a sudden, I think the strategy for Ireland is becoming a reality.
Well, I started this process way back in 2019, looking at the future security of gas supply in Ireland. 2009. And then I published an article in the Irish press in 2016 after Brexit. And a lot of people laughed, but they're not laughing now. It's crystallized in the last 2 or 3 months. We've always been in a position over several years to make sure that we kept our finger on the pulse in Ireland in terms of where things were going. We've hung on tenaciously to our successful authorization application for Ramhead, because it offers the only offshore storage facility that is commercially viable in the entire island of Ireland. And currently, Ireland has no gas storage for security of supply, whereas the EU directives are very clear. The countries must have diversity of energy supply. and storage facilities. I'm choking on Ireland. I mean, doesn't normally. So, you know, I feel that we're now really seeing the benefit of engaging with the regulatory authorities over the last couple of years, keeping our feet at the table, keeping our hands on the table, and making sure that we're advancing our position in the perception of the regulators and the government in terms of we're not going away. We believe FRS, the floating storage LNG project is the project for security of supply. We're more advanced than anybody else in that respect. We believe that we have the ability to deliver gas storage. We believe that we actually have the ability longer term to deliver CO2 sequestration. And we believe that there are some green energy partnerships that we can build around this integrated approach to the situation of security of supply and the transition to greener energy. Nobody else in Ireland thinks in this join up way. They may talk about it, but we're there doing it and trying to do it. We're very happy about that. And what I would say is just recently you may have seen comments that electricity prices may rise 263%, up to 263% in Ireland over the coming years because of the lack of clear direction on capacity, electricity capacity and demand to meet demand. We've seen the CRU, the highest regulatory authority in Ireland in the last couple of days, and EirGrid, the national electricity grid, say that they're going to start to have an auction in October for additional fossil fuel power supply. I mean, wow.
Ultimate irony.
We've seen, and by the way, it's an emergency auction, an emergency auction. I mean, hey, it's taken a long time to find out there is going to be an emergency, but it's all crystallizing. So also what's happened is that EirGrid have told the data processing centers, these new fantastic data centers.
I heard about this.
Underpin the rebirth of the Irish economy after COVID. Oh, by the way, guys, we can't supply you with electricity. You build your own power generators. Yep, good luck, chaps. The maze of Irish regulations, EU regulations, court challenges, environmental impact studies, in 10 years' time, you might just have those working. So the issue is in the next couple of years, 2 or 3 years, and it's just not being addressed. And that's what's so sad about the current situation is that the dismantling of the fossil fuel industry, apart from us, has taken place against the backdrop of a drive, quite rightly, to renewable green energy. But what it has done as a result of that is create a crisis, an emergency. Not my words. I didn't use the word emergency. They did.
Yeah. Good. Well, I think that tells us very much that you're back on the front foot, the front burner in Ireland. And before I close, because as usual, we've gone on a long time. I noticed that you recently raised a little bit of money in the marketplace. I mean, I suppose tempting to do so at 10.5p. Although I noticed just before I came on, I checked the price; it was 14.25p. Your thoughts on that, please, Paul?
The issue for us was that we have moved faster than we anticipated. We never expected a year ago all 3 of our projects to come to a critical stage in development strategy. We expected CO2 EUR, we expected at some point to be here in Morocco. But because of this success, we're now having more opportunities to grow our business than we had a year ago. And the result of that is, it makes sense to have that little bit of extra working capital to progress things, to have the ability to have a decent testing program on Morocco, plus the ability to mature some more well locations on the ground, plus expanding Trinidad, plus pushing LNG, plus looking at greener energy opportunities, and a number of parties that have approached us for symbiotic relationships in this field, where we can give something and they can give something. So, why would we not shoot ourselves in the foot by not having some available capital? And there's an old adage, extra available capital. There's an old adage in our business, in the risks, we're all businesses, If there's money on the table, take it, because sure as hell it won't be there 3 months later when you may need money for an appraisal well, for example. So it just makes sense. Our share price has gone up nearly 250% since the beginning of the year. I'm not sure there's too many companies on AIM or on the standard list that have performed that well. It's simply because our management is recognized, in my view, as being a can-do, will-do management. Despite COVID-19, we push ahead. So my analogy to my shareholders is very simple. Think of the animal kingdom. Think of the slow-moving sloth in the Amazon jungle, hanging upside down, staring at the sky. And then think of the cheetah, the predator, accelerating fast, hunting down the quarry. And it's a question that I'm sure our audience can identify with plenty of sloths around the world at present, around the business that we're in. But my message to them, well, it's all fun being a predator.
Well, I understand that. And the only analogy I can think of is to say that if the ducks are quacking, you should feed them. So we have to close up there. I was going to say your partners in the future for green energy and so on. I think you've, to a certain extent, covered that. Any last comments before we call it a day, Paul?
I think there will be good news flow. I think there will be good news flow coming through over the next few months, next few weeks. So I think our success to date is all very good, but it's only the starting point in terms of where we want to go. So the next 12 months is going to be very exciting and very, very value creating for us and our shareholders.
Good. Well, I wish you all the best for that, Paul. Thank you very much for joining me today as my guest. And thank you too for watching. My name is Malcolm Grahamwood. I've been doing a CEO interview for Core Finance. My guest has been Paul Griffiths, CEO of Predator. We now know why. Predator Oil and Gas. Thank you very much, Paul, and thank you for watching. Bye now.